Hello traders, welcome again to the weekly Forex Forecast. My name is Gabriel Ojimata and this is Trade Forex with Gabe. I will be walking you through the market setups and opportunities we see for April the 29th through to the new month, May the 3rd. It's a month that holds a week rather, that holds a lot for the US dollar and has two major important data we will be anticipating for the week. That is FOMC and NFP. So let's look at what other data we will be considering into the week from the economic calendar. So on Monday, we have CPI data to affect the euro. And on Tuesday, we'll see GDP month in month affecting Canadian dollar, then employment cost index to affect USD, and then employment change and unemployment rate affecting NZD. So these are high impact news, so put it into consideration. On Wednesday, we'll see very major data coming out on affecting the USD, and that's the interest rate decision, popularly known as FOMC, where it's expected that the dollar will retain an interest rate. The Feds will retain an interest rate on the dollar at a 5.5% rate. On Thursday, we'll see CPI data affecting Swiss franc and unemployment claims data affecting US again, and we'll see the Bank of Canada Governor McClellan speaking on same day. And on Friday, we'll see another high impact news, that is the non-farm payroll data, that is NFP, to affect the USD, and also we'll see ISM data also affecting the dollar. So if you pay keen attention, you'll see most of the high impact news is affecting the dollar. So despite the dollar coming out as one of the best pairs to trade for the week, well, we have to put all of this news, this high impact news, into consideration as we trade into the week. So let's go back to run some analysis on what the indicators are saying, that is the strength meter of individual currency pairs. Starting with the dollar, we'll see that it lost some steam from last week, 1.3, now at 0.8, but it's still the best performing currency in the market. Next performing is the Australian dollar, which moved from negative 2.3 now to positive 0.7. And then we see GBP moving from negative 2.3 to 0.2, and Euro losing more steam to negative 0.3. We see Canadian dollar also gaining some strength there to 0.4. And NZD also gained some strength at from negative 2.9 to negative 1.3. Then Swiss franc losing steam from negative 1.2 to 2.1. And then the Japanese yen was one of the worst performing pairs in the previous week. You will see all of that. So looking at the best pairs to trade into the week, my best pairs, top performing best setups are on USD pairs and Australian dollar pairs. So I'll be looking to trade USDCAD. If you recall, these are some of the pairs we focused on last week. So we will be, it's still some of the best setups we have. Last week, well, when I get to that part, I'll show you exactly how it played out from last week. So we trimmed out some of the pairs like AUDUSD, and all of the pairs you see here are still the pairs from last week. Okay, and then we also will be looking at Australian dollar pairs. We'll look at AUD Swiss franc to go long on it, AUD NZD going long, Euro AUD short, AUD CAD long. So let's look now at how these setups, or what this pairing looks like on the chart using price action. So let's start by looking at the dollar index. Okay, on the dollar index, we've been I have been bullish on the dollar, since it broke past this key level. Let me recall it, 104.73 region. Since it broke past that region, I've been bullish on the dollar. And right now, what we see is another very important price action setup, which is looking like a bullish flag. So with this, we have a bullish flag. So the anticipation is that price should break above, okay, it should break higher into 106 and 106.88 as the final level. So we need to watch out for that and see if the news favors the dollar, then this is a big catalyst to see that dollar shatters the last high and gives us new highs. So those new highs can be seen by taking a measurement of where the final technical target will be. So you see it exactly here. So this is a very key, what do you call it? This is another key level. So this is what the bullish flag looks like. So we anticipate that we will see that breakout, but please don't forget, you have to wait for the trigger. You have to wait for the trigger. Now, let me use the next pair to emphasize why it's important to wait for the trigger, because this is one of the pairs we also focused on last week. But I gave you the trigger. We're looking at when price breaks away from this channel, which is also looking like a bullish flag. You see that? Then we can look to go bullish on it. So this did not happen last week. We continue to consolidate even further down. And I want to believe that this will be the week we will see that needed breakout to the upside towards the 1.3842 level. So to look at it on the D1 daily time frame, obviously we have achieved the technical target for these breakouts, but there is still more potential that we will make some new rallies again. But my trigger points are already set, so I won't be just jumping in on the trade. We'll have to wait for price action to tell us exactly what we should do. And I want to believe that that will come if price can break the last high somewhere here. Okay, the structure have been downward. So if price is able to break the structure here, then this presents us an opportunity to go long again into the 1.3842 that was achieved. Okay, so let's go into the next one, USD Swiss franc. Now this pair from last week, you will recall that we had the channel facing downwards, but after this week, you have to be able to admit sometimes you didn't do proper price action setups or drawing. So in recalibrating my channels, what I see this week is that this is how price has been trading, or this is the signal or the price action that price has been signaling. So we are back at this again. So notice that this occurred around February through to March, where we had the horizontal rectangle. Again, this is repeating itself. So it's a fantastic trade opportunity. So what usually I can do is just to set up a buy stop order, and the target is 0.9233 level. So this is a nice trade. I believe that the breakout will be to the upside, and if that occurs, then the target is already given, technical target about 88 pips. Okay, so you can watch out for that. Set your stop loss below the lower boundary. Next on the list is USDJPY, and last week we gave the targets to be 156.00. That was fully shattered. We achieved that goal and even super extended. How many more pips? Over 240 pips, even higher. So for this week, I only want to see price retracements. Okay, I want to see, let's get what the FIPS are saying or is saying. So if we're able to get some correction back to this key level, our technical targets from the previous week, then this will present us a good opportunity to go long again. So you see, finally, we've been able to achieve the upper boundary of this channel. So what else can await us? We may have the Bank of Japan, BOJ, start making those needed intervention like you see here. These are all BOJ interventions, okay? We could see those intervention happen again, and, you know, market will correct to the lower boundary. Then we start looking for new rallies again, okay? So Euro USD is not in the mix. GBP USD is one pair I still have some trades on because I believe we still have some selling off to do. Although price seems to have achieved the technical targets we called for last week. So that target was achieved, but, you know, with pound sterling still looking out, having an outlook to be weak, I believe that we will still see further sell-off to the downside towards this target again. That's the 1.2303 level. So if you're trading GBP USD, I'm of the outlook, I'm of the opinion that we will see another sell-off to the downside. Okay. Next on the list is NZDUSD. NZDUSD. Yep. So this trade also did not play out last week because we pulled out our Fibonacci tool and we said we'll have to expect price to make some retracement, some correction into the 23, 38 or 50% Fibonacci ratio levels. Now this was achieved. So what I'm looking out for this week is just a simple breakout. Can price just give me a nice breakout? So I would like to trade this on even lower time frames, such as M30. Okay, such as M30. So if we see these breakouts occur, if we see the breakout occur, then this will present us a fantastic trading opportunities. Okay, because we're already at the Fib levels. Let's use this one. So I want to believe that the 50% Fib level ratio would hold, and we will see that breakout, okay, to the downside. So traders, I want you to watch out for that. This pair NZD/USD has been a wonderful shot since early February. So we saw that breakout from the first channel, the second one, and now we're seeing another one again. So it's a good trade, in my opinion, based on the setup I see. So that's it for USD pairs. Let's go into Australian dollar, which is on the next best performing pair. So we'll be looking at AUD Swiss franc, NZD, Euro AUD, and Euro CAD. So let's start off with AUD Swiss franc. AUD Swiss franc. Just a moment. There you are. So we're looking to go long on this. We have this nice breakout from this channel. We've already been able to get the retest. Okay, we've been able to get the retest. So what does that imply for us? We just have to this level to take out our profit. So the only thing I have against these pairs on AUD is that there's no good risk to reward ratio, really. But then, in case you are one of those that like to trade such, then this presents you a good opportunity. Okay, the breakout, the technical target for this breakout is at 0.6049. So let's see how that plays out. And you know, it's the policy of course to take those trades. Mine is to show you the opportunities there is. So for this week, I expect AUD to further give us new rallies into this high 0.6049 level. Next on the line is AUD NZD. AUD NZD. We're looking to go long again, and again this pair is overextended, so the key levels are indicative that the technical targets for these breakouts will be achieved, and the target is 1.1047. Again, you'll see that this is presenting us with not good risk to reward ratio, so 143, whereas the final TP we're anticipating is about 47 pips Yeah, about 47 pips, you know, to the upside. So this is not good, a good risk reward ratio. So I would like you to be careful if you must trade this pair. Next is Euro AUD. Okay, there you are. And on Euro AUD, I think again we are having an overextension or a very huge move already before this is coming out under our radar. So what I expect here is for price having broken out from this channel. You know, the technical target is already given, and that is 1.62524 level. So right now you will see that again we're not having perfect risk reward ratio. So this is 117 pips, and we have over 300 pips as a very safe place to set your stop loss. So if you must trade this, put this into consideration. Okay, you have to put it into consideration. And the last but not the least on the pairs is AUDCAD. AUDCAD. Just a moment, let's get it out. There you are. So on AUDCAD, I recall this trade. This was one of the trades from last week where we said, just wait, if price can close below this. This was at market open. At market open, we saw price, you know, starting up with a very big gap, started off here. And I recall saying in the last video, wait, if price is able to make it down here again, then we're going to be selling. And I think I gave the profit target, yes, 0.8655. But you see that price never came back down there. And this is indicative that the weak market traders or the market perceived AUD to be really strong. And you can see the effect already as the week came to a close. So into this new week, we have price trading within the channel. So what I anticipate is for price to again rally up to the upper boundary of this channel. This is about 63 pips or 85 pips. And a good place to set your stop loss is at the last low. And this is about 157 pips. So this is my best pairs. Again, USD pairs. AUD pairs have been really stretched. So going in, the only challenge I have there is that the risk to reward ratio are not it's not really good for me. So, but if you must trade it, be sure that you put that into consideration in calculating the lot size to use to open those trades, so you can get a better reward for the risk you are taking. So this is where I'll draw the curtain until next week again. I want to wish you all the best. Don't forget to do correlation analysis. Don't forget to trade carefully and don't risk too much. This week is very volatile for the USD pair. So if you don't get the trigger, no need to jump in. Upper week is another time to trade in case you missed out on the opportunities for this week. So from my trading desk, traders, do have a lovely week ahead and see you next week. Bye-bye.